Hello and welcome back, my favorite degenerates, risk lovers, and viewers who pretend like they come here to actually do research. I'm your host, Max Pitts, and we have grown so much over YouTube and Substack over the last week. I thought I would just reintroduce myself. Again, my name is Max. I'm the guy behind Trades and Gains. Outside of Keone and Los, I'm really the main person who produces a lot of the content, puts out a lot of our articles, so on and so forth. So, hello and welcome, and I hope you enjoy this journey, because I think this is like our 140th episode too, and I have over 700 published articles on the web. So, look me up. I'm Benny the Bull, by the way, or Ben P. That's like my pseudonym I decided to use. Anyways, let's go ahead. And the only joke today, by the way, because it's April 1st, so obviously, like, I had to come on here and be like, I'm pregnant, as like an April Fool's joke. But the market was trying to act normal ahead of tomorrow's economic grenade. Trump's, quote, and I unquote, Liberation Day. Yeah. This is the tariff reveal. This is the red carpet showing for our boy. This is where we get to see where all the cards are going to fall. However you want to put it metaphorically, tomorrow is a big deal. Now, the S&P 500, luckily, we had a nice little snapback with a 0.3% gain. The NASDAQ even saw some positive gains with a 0.87% gain after its abysmal loss yesterday of tech just getting smacked in the mouth. And then even the Dow, I mean, granted, it popped 1%, but we only had a minimal flatline loss of 0.03% for the Dow Jones Industrial. Not exactly the kind of confidence you want heading into a global trade war. Anyways, let's get freaking weird, boys, and let's get into it like some butt cheeks. So, first things first, stocks were green, but the vibes were very much beige. Very much, I want a latte with almond milk energy. Annoying. With reciprocal tariffs. Anyways, my bad for the quick pause. Reciprocal tariffs are rumored to drop tomorrow. Traders rotated into tech and quietly dumped everything else while nobody was really looking. But don't worry, we got dark pools and options flow to expose all your little ugly little secrets and sneaky little moves that did not work, by the way. The NASDAQ led the charge, however, but it wasn't conviction. It was hedging. It was straight up hedging, people. This is not a move. This is a CYA. Cover your AF, because that shit could get blasted tomorrow. Mega caps like Microsoft and Amazon bounced off recent lows, but look deeper. Job openings just hit a 4-year low. ISM manufacturing slid back into contraction, and inflation pressures are absolutely mounting. Mounting is an understatement, by the way. I can't even think of a bigger word. The Atlanta Fed's GDP Now tracker just downgraded Q1 growth to minus 3.7%. Now, mind you, we were at minus 1.7%, got minus 0.28%. Now we're at minus 3.7%. It is dropping faster than a day shift stripper. And that is not a typo, folks. The economy is literally shrinking again. Growth is stalling, inflation is sticking, and Trump's ready to blow a hole through global trade. Fun times. Fun times to be in the market. That's all I'm gonna say. That's all I'm gonna say. Anyways, let's go ahead and talk about some flow from our favorite sponsor, Investor Central Club. If you want easy, actionable insights into options flow and you don't need to like decode things, or you're not trying to do deeper research and you just want that nitty gritty raw, give it to you raw and straight, raw dog you all day and night, then Investor Central Club is for you. I have a link if you are interested. Just ask me for it. Just ask me for it and I'll give it to you, buddy. I'll give it to you. Anyways, let's go ahead and talk about some flow, baby. Today we had IWM actually led the charge in flow, which is crazy because they're usually like bottom third of the list, folks. We had 53.65 million in overall, with 15 million in calls and 38 million coming in the puts. Coming in puts, my friends. That's not good. That's not good. I mean, granted, people don't like IWM, so it's not shocking. But our most bought contract were the 190 puts that are due for May 16th of 2025. So we're expecting a lot more downside there. Moving on, we had SPY with 49 million in flow with 5 million in calls against 43. Yes, you read that right. 43 million in puts. It is a bearish premium market for SPY, and heavy puts stacked at the 535 and 530 call or puts expiring in 4.5 and 4.12. And this isn't YOLO, this is surgical defense, so they don't get their ass handed to them. We also had RMM with 53.5 million in flow with 38 million of it in puts. The contract getting hit the most were the April 4th $200 strikes. That's someone betting on pain with days to spare, by the way. So it's not temporary pain. It could be long-term here. NVIDIA, we had 34.89 million in flow with 13 million in calls against 21 million in puts. And our most hit contract for NVIDIA, folks, let's go ahead and take a look at that. Let's look at it. Just look at it. We had the $112 put as our most bought contract, expiring in March, April, May, June 20th of 2025. That was our most hit contract. And on top of that, we had $273 million in dark pool activity. Institutions are unloading before Liberation Day, maybe. Maybe they are expecting a lot more pain than what we're expecting. And for the record, they have a lot more to lose than we do. So let's just keep that in mind. FSLR also got smacked with over $28 million in bearish flow. That's what happens when tariffs meet solar sector margins. And PLTR saw 23 separate put trades totaling $9 million. The highest frequency flow of the day, folks. That's crazy. Honorable mentions here would be Broadcom, QQQ, and Tesla. They all showed large and in charge put positioning. Even Tesla bulls are hedging, and that's saying something because they are more loyal to Tesla like a cult, like Mormons are to Mormonism. It's insane. They like it a little too much, people. Now, when it comes to digesting our dark pool data, we saw SPY with nearly 1.4 billion in dark pool prints today. The biggest was at 561.65 and 563.77 above spot. Is this bullish positioning or just a shuffle ahead of more pain that we are due for this week? GLD saw multiple $200 million plus prints over in the dark pool area as well. And this was at the highs. It looks like the whales are in full-blown bunker mode. QQQ, Google, IWM, and MO saw chunky blocks as well. IWM had prints 5% below the spot. Someone's bailing on small caps, like they say, or more so, like they saw tomorrow's news early. Does somebody know something we don't? Probably, considering institutions are assholes. TLT and IEF also showed size. Bonds are catching a bid again. The conclusion here, institutions are not speculating. They are positioning, and they are positioning fast and hard, folks. Now, Stagflation storm is absolutely a brewing, and it is something you need to be on the watch out for. ISM PMI dropped to 49. That's contraction. Prices paid hit 69.4, the highest since mid-2022. Welcome back, stagflation. We have missed you, my babe. Job openings slipped to 7.57 million, the lowest since early of 2021. That's not the hot labor market the Fed was hoping for. And if you're wondering why gold just printed its fourth straight all-time high at 3150, it's because the market sees what's coming. Protectionism plus inflation equals portfolio butt fucking. Newsmax extended its absurd IPO run, now sitting at a $10 billion plus market cap. Peak election year delusion? Probably. J&J tanked after a judge blocked its talc settlement again. They've now taken more L's in court than the Knicks in the playoffs, or if you're just a San Francisco Giants baseball fan. Tesla registration in Europe cratered, with Denmark down 65%, France down 37%. The stock bounced plus 6% anyways, saying middle fingers to my haters, y'all. Anyways, put in the insert shrug emoji. Q1 GDP, the projection fell off. Falling off a cliff doesn't even do justice how bad it turned. It's down 3.7%. If this keeps up, Liberation Day may liberate your 401k of its total value, my friends. So good luck to y'all. Good luck to y'all out there. Let's see what we got looking at the rest of this week, though. We got Liberation Day tomorrow. Friday, we got the jobs report expected plus 135,000 jobs and 4.1% unemployment, which would stay steady across what we've seen over multiple months. That's nothing new, baby. Weak print, though, after this week's data will equal a total panic. Watch out. Stockpile your top ramen. Go get your guns. And be safe out there. Anyways, markets closed mostly green, but nobody's buying the bounce here. Big money's hedging. Flows defensive. Dark pools are moving quietly but urgently. And all eyes are on April 2nd. Liberation Day. Whether Trump goes full-blown tariff maximalist or whatever you want to call him, or throws a curveball, the market's already, before even news has been announced, it's waiting for a fallout, though. If you're long, hedge. If you're hedged, double check. If you're short, congrats, because you're getting paid, baby. Like, I made my whole paycheck in 2 weeks, in 2 hours today. And all I did was just work and look at my phone every once in a while. So that's all I'm going to say. Like, maybe my job just pays horrible too, which it does. But anyways, if you're long, yeah, just hedge. Smash that like if you enjoy pain. Subscribe if you like chaos, and drop a comment if you're bracing for impact or betting on a bounce here. Are you a power bottom? Is this where you think the bottom comes in? Because this is the time to flex it if you are a bottom. So bottoms out there, start spreading. All right. Stay nimble. Stay skeptical. And I'll see you on the other side if you don't kill yourself from all of the pain we're going to experience after tomorrow's print of Liberation Day. See you guys in the next one. Love you all. Have a great day.